Hey everyone, welcome to today's Explainer. I'm so glad you're joining us. Look, if you're laser focused on conquering the real estate market in the Badger State, you are exactly where you need to be. We are doing a deep dive into the one tool every single Wisconsin homebuyer literally has to master before they even step foot at an open house. Yep, we're talking about the Wisconsin Mortgage Calculator. Because let's be real, landing that dream home, it takes way more than luck. It takes precise financial planning. So let's unpack exactly how to do that. So I want to start us off with a simple but honestly kind of tough question. Is your dream home actually in your budget? We all have that amazing vision of homeownership, right? You're picturing the perfect backyard, the friendly neighborhood, that cozy living room. But before you get too emotionally attached to a listing, we got to introduce just a little bit of necessary friction. You absolutely need precise financial planning first. Our main goal for this explainer today is to really highlight why it is crucial, and I mean absolutely essential, to run your numbers through a Wisconsin-specific mortgage calculator before you buy. Honestly, before you even start seriously shopping. You want that financial confidence before committing, and that all starts with knowing your true limits. All right, here is our roadmap for today. We'll start with the true cost of buying, then look at why local math matters, busting common calculator myths, steps to calculate your costs, and finally, comparing your loan options. Let's get right into it. Section 1. The true cost of buying. It's about way more than just the principal. You know, the biggest mistake future homeowners make is thinking their mortgage is just about paying back the loan amount itself. But the complete monthly payment puzzle, which industry folks often call PITI, involves a whole lot more. Sure, you've got your principal and interest, which is the cost of the house and the cost of borrowing the money. But you absolutely have to factor in those other pieces of the puzzle: property taxes, homeowners insurance, and maybe even HOA fees. Smart buyers know a mortgage payment isn't just one thing. If you leave taxes or HOA fees out of your mental math, you are going to be completely blindsided when you have to write that check every single month. You just can't buy what you can't afford. So all four of these expenses need to be in your calculator. Moving on to Section 2, why local math matters. And specifically, our Wisconsin variances. Just consider the sheer contrast in property tax rates across different counties in Wisconsin. It's wild. Up top, we've got Milwaukee County sitting at a 1.99% rate. Then you slide over to Dane County at 1.69%. But then think about Vilas County. It's sitting all the way down at just 0.77%. This right here perfectly proves why you have to calculate using specific local data. If you use some generic calculator that just assumes a flat national average for property taxes, well, your budget estimate for a place in Milwaukee could be drastically undercalculated. Or on the flip side, you might think you can't afford a beautiful home in Vilas County when you actually have way more flexibility than you realized. This reality should be a total wake-up call. A tiny change in local taxes or interest rates can literally swing your monthly budget by hundreds of dollars. Guessing is just a massive risk. Honestly, these percentage differences dictate whether you're going to live comfortably in your new place or if you're going to end up what we call house poor, where every last dime goes to your house and you've got nothing left for emergencies or just enjoying life. All right, Section 3, busting common calculator myths. Let's separate fact from fiction. Here is the very first major misconception. People hop online, punch in a couple of numbers, and think, oh, it's just a simple tool. They treat it like a basic desktop calculator doing simple addition and subtraction. But here's the actual reality. A high-quality Wisconsin mortgage estimator is a highly complex financial model. It doesn't just add numbers together. It's actively predicting your financial future based on some pretty heavy long-term math. It factors in amortization schedules, which basically means it figures out exactly how your payments get split between principal and interest over 15 or 30 years. And it factors in compounding interest every single step of the way. Then we have myth number 2. All calculators are the same. Man, this one traps so many buyers. They just Google mortgage calculator, click the first sponsored link they see, and assume the math is universal. But the reality, like we literally just discussed with that county breakdown, is that generic tools completely ignore local realities. If your tool doesn't know you're house hunting in Milwaukee County versus Vilas County, your estimate is going to be dangerously wrong. A Wisconsin-specific tool actually lets you customize inputs for regional tax rates, annual homeowners insurance premiums, and even lets you play around with monthly versus bi-weekly payments to see how much interest you could save. And that brings us to the final myth on our list. Results are always 100% accurate. This one causes buyers to treat their online estimates like absolute, locked-in guarantees before they've even spoken to a bank. We really need to clear the air on this. These tools give you highly educated estimates, not final offers. They are absolutely the ultimate starting point to figure out if you can afford a home. But the actual final numbers when you're sitting at the closing table, they're going to look slightly different. They'll be subject to specific lender fees and variable closing costs. Your final HUD-1 settlement statement, which is the official document detailing all those costs, will definitely differ from an online calculator. So use the tool to set your baseline budget, but definitely don't treat it like a signed contract. Section 4, Steps to Calculate Your Costs. Let's walk through a step-by-step guide. All right, here is a clear, actionable system for actually using your calculator. Step 1, gather your financial data. You got to know the target home price, your planned down payment, and your credit score, since that heavily dictates your interest rate. Step 2, input this information precisely. Seriously, no guessing here. If you plan to put down a specific dollar amount or a percentage, enter it exactly as is along with the current market interest rate. And step 3, interpret the results and adjust your variables. The beauty of the tool is it gives you instant feedback. If that monthly payment looks a little too scary, you can instantly tweak your down payment or test out a different loan term to see how the math changes. Now, the absolute most crucial point when you're interpreting those results is the 28/36 rule. This is pretty much the golden rule in real estate finance. Your housing payment, that full PITI breakdown we talked about earlier, should not exceed 28% of your gross monthly income. On top of that, your total debt, which means your mortgage plus things like car loans, student loans, and credit cards, shouldn't exceed 36% of your gross income. If your calculator results push you past these numbers, you really need to adjust your expectations to make sure you maintain a healthy financial profile. Finally, Section 5, Comparing your loan options. Let's do some strategic planning. Let's compare your two main rate options side by side. On one hand, we have a fixed rate mortgage. This gives you high stability with a consistent, never-changing payment for the entire life of the loan. Honestly, it's the safest bet and usually best for long-term homeowners. On the other hand, we have the adjustable rate mortgage, or ARM. This one has variable stability. It usually kicks off with a lower initial interest rate, so it's cheaper right out of the gate, but that rate can change and shoot up later. It's typically best if you're only planning a short-term stay. By plugging both of these into your Wisconsin calculator, you can literally map out the long-term risk and reward of both scenarios. And think about the massive impact of your loan term. If you go with a 15-year term, your monthly payment is going to spike significantly. But the huge upside is you pay off the debt twice as fast and completely slash the total amount of interest you're handing over to the bank. Now, a 30-year term gives you a much lower monthly payment, which offers a lot more breathing room in your day-to-day budget. But yeah, you will pay significantly more in interest over the life of that loan. The calculator is awesome because it lets you just toggle between these two terms to find that perfect sweet spot for your current finances and future goals. We also definitely have to talk about the massive impact of your down payment size. The calculator is great for experimenting with this. If you can manage to hit that magic 20% down payment threshold, it instantly lowers your monthly burden. Why? Because a 20% down payment almost always eliminates the need for PMI, or private mortgage insurance. That's basically a monthly fee lenders tack on to protect themselves if you don't have a lot of equity in the house yet. Knocking that fee off your monthly estimate, that saves you a ton of cash over time. So what's the game plan once the math actually makes sense? Well, here are your vital next steps to turn those digital estimates into real-world buying power. First, double-check that your debt-to-income ratio actually fits that 28/36 rule we went over. Second, go secure a formal pre-approval from a lender, places like Guaranteed Rate or Associated Bank. That proves to sellers that you mean business. Third, consult a licensed mortgage professional to verify your numbers and lock in a rate. And finally, take advantage of trusted local resources for advocacy and education, like the Wisconsin Realtors Association, which has been serving the state since 1998. Actually, speaking of the Wisconsin Realtors Association, our source material pointed out a fantastic, kind of surprising little local quirk you should definitely know about. If you're mapping out your home buying schedule and plan to use their resources, take note. Their office actually closes at 12 p.m. on Fridays during the summer. So keep that in the back of your mind so your Friday scheduling goes smoothly and your weekend real estate trip is completely stress-free. We have covered a lot of ground today, from the true cost of buying and local property tax quirks to busting myths and testing out different loan scenarios. And it all really boils down to this final thought. Are you ready to create your financial future, or are you just going to leave your biggest budget item to chance? You know, as the saying goes, the best way to predict your future is to create it. and that starts with understanding the true cost of your investment. So take control, find a Wisconsin-specific calculator, and go run your numbers today. Thanks so much for hanging out with me for this explainer, and hey, happy house hunting!